Take a look at shares of Kohl's today. They're trading near a 3-year high. JP Morgan upgraded the stock. Matt Boss did to overweight. Stock's up 4%. He's got a $72 price target. It's our call of the day. Man, retail has been on fire lately. Can this last?
All you have to do is throw a dart at it. I don't think it can last.
What a difference a tax cut makes, I guess.
Yeah, I think it'll last for some, but still, they still have the problems that they've had before. I don't think those are over. Stores are coming out of the market, which Jimmy likes, so you're lowering capacity. But there's some that I think that come back. I mean, I think Nike comes back. U.S. sales are still sluggish. That's part of his Kohl's upgrade. So I think there's some room there. And I think if you're selective, like the Lulus of the world that have moats around them, I think those are
I'm with Weiss.
What about the XRT? Is this a buy?
So I'm with you on that. I think like the whole sector, they pay an average tax rate of 31% prior to what would happen. It's the highest industry group within the whole market. So of course they should get a big bounce. And you couple that with pitch black sentiment and huge short positions in all these names. So you have this massive look at Kohl's 40 to 65 like in 2 weeks. So you get that. But to Weiss's point, okay, that's great. But in the end, none of the real challenges beyond what the tax rate's going to be going forward have been alleviated. And none of these companies have really come out with anything that shows you that they've got a solution in place that could definitely work. So you have to be very selective here.
This seems to be a thing of timing for me. Well, you have the momentum of the holiday season.
Yeah,
right?
It all happened at once.
You're good. And these stocks started picking up because the holiday shopping season was pretty good. And then you get a tax cut before the end of the year for the extra little gusto on this trade.
I'm not going to self-deprecate too much. Obviously, I know a thing or two about being early to the retail trade, okay? Let's leave it at that.
Where is JCPenney today, by the way?
It's done well. We're not going to talk about JCPenney. We spent 2017.
Let's throw it up.
Stop.
You went there.
Stop. Look,
you opened the door.
I know something about being early to the retail trade.
Stock is on fire.
You're early to the retail trade on this. Now, Kohl's is a fine store. It's going to be around, but you still have too many stores. And to the point that Josh and Steve are making about the tax cuts, this is an industry in which any gains from tax cuts are going to be competed away from just this ferocious competition to see who survives. You still have too many stores, too much competition. Now, the question is, when will it not be too early? Look, get past the February reports in these names. Late February is when these guys report. See who really made money in the fourth quarter. We know that revenues went up, but we don't know if that was at a cost.
Guys in the back, throw up the Kohl's chart again. Did I just see it's up like 50% in a month?
Yes.
But so look at Matt Boss, great analyst. We've had him on the show. Very good. But he had a $51 price target. So he's saying either I get off the train or I upgrade the stock, find a reason to upgrade. That's not a very aggressive target relative to where the stock is.
You're not going to fault anybody for getting off the train, in your words, at up 55%.
I'm not at all. But that's the decision he was facing.
But look where it came,
should you do that more
from,
broadly in retail? To some of the stocks that have run, maybe not as strong as this one. But
it was first of all, it was 72 years ago. But second of all, my question to you is, if you saw a retailer take this benefit from a good holiday season and the tax cut and start talking about return of capital to shareholders, wouldn't you run the other way?
Why? Wait, no, wait.
They should be investing.
This is a great question.
Done.
This is a great question.
Don't give me a dividend.
No, you're right, okay? But when you're talking about returning capital, there's a couple of things. Some of these guys need to return capital not to the equity holders, to the debt holders, if they're going to survive.
Of course,
okay?
I'm not talking about that. Well, talking about buybacks and dividends.
But you are also right. Listen, there's no question that anybody who doesn't have the online presence to order online and pick up same day, that's where you're going with this. You're absolutely right. That has to be. That's a mandatory, not an optional.